weekend all. Ira Epstein of Linn and Associates with your weekend edition of your metals market wrap-up, and this is for Friday, and we're now on the 1st of November, 2019, just after 4 p.m. Central Daylight Time. So an interesting week. While you see a lower close on the day on Friday, the last trades of the day were just over the 15-16 level, and silver was closer to the 18-12 zone. But the settlements are determined at 12:30 p.m. Central Daylight Time in gold, silver, and a number of the metal markets. So that's what you go by. But I'm just telling you, I wouldn't be surprised if nothing changes over the weekend that the metals open higher come Sunday night. Stock market, many of these indices going for all-time highs, all-time high closes, in fact. And what we saw today was a combination of very good jobs data. We saw a Fed that seems to be backing off now the insurance purpose of rate cuts. They did 3, and that seems to be where they're ending. That's the goal that they're trying to do. We heard more news on the U.S.-Chinese trade deal, and I never quite trust believing what I hear in the press these days out of Mr. Kudlow and others that are talking about how good it goes, because you get so disappointed. But again, he said it's good. Wilbur Ross said it's good, our Secretary of Commerce. And then the Chinese ministry came out and said they have agreed on principle, and that while there's still some open issues, which I think they're alluding to the forced transfer of technology and the stealing of technology, I think other issues such as currency, the boundaries, I think that they've resolved trade on agriculture products, and it's looking more and more like a first phase, as they call it, of the trade deal is very close to a signing date. Now, when they'll have that date, we don't know. You do realize in Chile they called off the meeting, not the U.S., but the government of Chile called off wanting people there because they're having such an uproar over social stability. Maybe that's the right word to call it. But the market today jumped in the energy market, so that's a good sign. The market dumped more of the yen, sold back off the bonds and the notes. So yesterday, when the risk-off mentality went into place and the stock markets were down and so on, and then late in the day as they came back a bit, well, the risk-on mentality went as soon as we saw the jobs data good and these other words on trade. So what does it do for the metal markets? Well, the dollar is under pressure. That's a bit beneficial. As we come to the monthly chart on a gold, I liked what happened last week. And that is, I wanted these markets to get back under the upper Bollinger Band. And the market did that. If you go, and this is a monthly chart, so this was for the month of October. And right now, we don't know where we're at. This is the very first day of November. But the fact that it got back under took it out of being too aggressive on the upside. Now resistance is closer to the 1554 level. Momentum is still up, and the trend is okay. You've had higher lows. I don't know that until you take out right here this high of 1518.20 that I can call the trend up, or can I? I can. Why? We've already hit 1519. We've got over that, as you can see now. So until you take out 1458.30, you've got a pattern of consistent higher lows, higher highs, bullish. Another element happening on the monthly chart, and this is a very long chart. The 18-month moving average is challenging the 100. That's a bullish crossover if it occurs. We haven't seen one of those in a long time. I think we have to go back over here. And that's where you had the 18 get underneath it, and it hasn't been able to cross back over it since that point in time. Often when it does, it's a sign of strength. When we come to the weekly area chart of closes, you've stayed over this 18-week average, this red line, since March almost. And since then, if you'll notice, the market has worked its way grudgingly higher, but it's higher. And if you take a look at a weekly bar chart and the sideways action, you can see the market's got a boundary here way up at this point. I don't mind telling you what that is. That number on this week was 1559.80, which ties together with the upper numbers that we're talking about, and to a low point right through here of 1458.30, and it's sort of been caught in that at this point in time. When we put onto it the swing line on the weekly chart now, You've got higher lows, higher high. That's bullish. What you don't want to take out is 1476.60 if you want to keep the pattern of higher highs, higher lows. In addition, the market is finding support against the 18-week moving average of closes. This week you got to 1483.10. The 18-week average is 1481.20. What was the week? The week did not take out the previous week, so just a higher high week. That's fine. Where's the resistance? Way up here on the Bollinger Band. Again, that number tying into the 1559, 1560.50. So I'm getting some numbers that are pointing there. Support 1481.70. And momentum, which had been working its way down, has now flattened itself out, as you could see. And it could cross over to the upside depending on how we reopen Sunday night. So I'm looking at the market that's in an uptrend. The key is the support's at the 1482. Should the market decide to challenge the old highs that it had here, the 1560 level on a weekly chart shows us some resistance. That number can fluctuate, obviously, as Bollinger Bands do move during the week. When we go to the weekly bar chart of GLD, same thing. Let's start with the momentum. Had been pointing down, drifting on you here, then flattened out. Now it's trying to turn itself up, and it's did it. You've got the red line over, as you can see, the dark lines, in other words, 66.84 is higher than 66.74. Number two, the market successfully held this challenge. If you take a look at this week's low, it was 139.55. The 18-week average, 139.70. Last week's low in the market was 139.60. So we have a couple of things here. We took out that low, came back up. Last week's high in the market was 142.83. We hit 142.90. So we have an outside week up. I think that the bulls grabbed control back. I think that the key is not to take out this week's low, because that'd be taking out and be an ugly thing on the way that I chart. Taking out the low of an outside week up often sets the market wondering where's the next low going to be under that, because that would be probably under wherever we open. We're going to move this 18-week average higher. I wouldn't want to see that. Can it take it out and just do nothing? It could, but as a chartist, I don't want to see that. I want to see the market poke through these highs, because you've got the bias up, you've got the swing line up, and you've got momentum up. So if it's going to continue, then I'm looking at the 147.27 possibility of resistance, and support here, 139.70, but I think that'll move up Sunday night. Well, actually Monday, when the markets reopen in the ETFs. In GDX, the market's got a pattern here where if we take a look at this week's range, and for the range you can see at 28.18 to 26.73. Well, last week, let's see, what did we have? We had 28.18 to 26.23. So we did not get an outside week up, but the way the swing lines work, if you were to take out 28.18 now, the swing line will switch from one of having lower highs and lower lows to higher lows and higher highs. 28.18 is a very important number next week. Momentum has gone flat. The bias turned up, negating the downtrend. Here's how that works. Your settlement was 28.01. That's over 27.82. So the bias is up, and if the swing line's down, the two negate each other. You want the filter of where the market bias is to be in line with the swing line. If the market were to fall back and take out 28.18 and come down, the bias would be down. Then the key would be to not take out 26.73, the most recent low. The gold-silver ratio continues to favor an overall friendly market. Often, I'm not going to say the word always, but often, bull markets in the metal complex are accompanied by silver gaining on gold. Not becoming more valuable, but as you could see, you got up to 93.85. That meant that back in July, you needed 93.85 ounces of silver to get 1 ounce of gold. So if you think silver is a precious metal, I don't think so. But it's looking at world trade. It's looking at that a lot of people like silver to hold on to. I give up. The most valuable of them all is palladium. yet I don't see it. My wife certainly hasn't asked me for a palladium ring. What can I tell you? Platinum, yeah, but platinum's not as expensive as gold, you know, often. So when we get to the silver, you can see you've got the higher lows, higher highs. Momentum is flattened out. The trend is up. The bias is up. Resistance back at this 1899 level. Let's call it 1900. This market's been a hard one because you had a big pump up to 1950. Took out a lot of traders when you got back into the 1710 zone. And is the market ready to go up and challenge those highs? In the copper market, we have a pattern. I'm trying to figure this one out. It's a son of a gun. Now, there are times when the swing line can't tell you a pattern. It happens when you have an outside day. Now, it could be up or down. And if in the case where it's down, if you take out that high, where's the real swing line? I don't know. And when that happens, I call it an ugly chart. Since I created the indicator, I can name what they are. And what it does is it drifts on you. Is the swing line here? Is it down here? If it's there, why is the swing line low is drawn over there? It's not that the formula is wrong. It needs to clean its act up. You're caught in a trading range is how I'll define it of the 273.70 to 251.25 zone. But obviously, if there's a U.S.-Chinese trade deal, the biggest user of copper in the world is China, and maybe that opens the door for their industry to pick up a little, because if we do well, then Europe does well, the tariffs come off. That's what people hope for. We'll see what goes on. Right now, the bias is up. I don't know what the swing line is. Now in the platinum, you're up 954. As I told you, it's not as expensive as gold at this point. You've got, though, an uptrend fully at work. You've got higher lows. Notice this red line, how the market held it. That is what we call the line in the sand, and the market found its footing against it. It has soared to the upside. Momentum is up as measured by the slow stochastic. The bias is up. You have to get under the current pattern all the way back under this close of 879. In order to say that you're taking out this uptrend. Doesn't mean that it can't happen, but right now the objective's 983, and here's the granddaddy of these bull markets. This is the biggest bull market of the year in metals. This is this one. This market's up probably close to 50% this year, and it just keeps having the higher lows, higher highs running on the Bollinger Band, which is classic bullishness, especially when momentum just stays locked in to the upside. So that is still going. And of course, the dollar index is at that magic number, that line in the sand, this 18-week moving average of closes. If the market breaks down from here, I'm going to look wherever that lower Bollinger Band is for that to be the first support zone. Bias, well, let me first say it. Momentum down, bias down because the market settled underneath the 18-week average. As long as you don't take out this week's high, the swing line is going to drop, and I'll take this red line over here. You're putting in the play wherever that number comes in as a possible support zone. Resistance, the 18-week average of closes. So you put it all together, it's exciting. And what I try to do is get you all going with my ideas as to what trends are doing and so on early in the morning. I get up 4:35 in the morning. By 5:15, 5:30, I'm reading all about Asia, what's going on in Europe. And what I start doing is I do grab a cup of coffee, just like you're seeing here, and I start a morning video recording. In that video, I'm not in it. I've got my headset on. I've got my charts open, and they're going to look this way. They're going to look very different than the ones you see here. I'm going to have more studies on them. I'm going to have window envelopes. I'm going to teach a lot more, and I'm going to review 40 futures charts and typically 3 to 5 ETFs each morning. And I'm able in that one to say, I want you to buy here. This is where your stop's got to be. This is what you do. You're looking for this and this trade. And I know some people say, well, Ira, it's just day trading. It is not. I'll just share this with you. I've got clients in on the S&P. And they've been in it now for a week and a half or whatever, and on the long side, okay, if they took the recommendation. But that's not a day trade. It's more than a swing trade. There are times when you can build positions. You can use the e-micro markets. You can use these new minis they've come out with. There's all kinds, not only on that, but metals and so on. But the idea here is in the morning, And by the way, if I'm wrong, I've got that stop in. You're going to see the word. I've got points of entry, exit. That's the code word for a stop. Profit objectives. I'm going to tell you, and I'm going to work you right through them each day as to what I think's going on in the market. What's the real purpose of this? To give you confidence if you're looking at a chart or you think you want to do something in the market. If you like what I talk about, you think that I've got something you might want to hear, well, that's the idea. Am I going to be wrong? 100% guarantee I'm going to be wrong. Am I going to be right? 100% guarantee I will have right trades as well. The idea is taking what I'm seeing, money management, using common sense, using what I teach in my charting course, putting it on this. Now, I cover the markets in this exact sequence each and every time. The reason is on the website, if you go there, there'll be a sidebar on the bottom of the video. As you move it, it's going to light up and say stock indices, currencies, whatever you want. I realize you may not want to view a 20-minute chart each morning, but I realize, let's assume you're looking at the gold. What's going on? You might want to get right to that section. Slide the bar, or on the side, on the website, it's going to say metals. Click it. It starts off with the gold each and every time. Because after I record, I render and I lock that in. Now, it's only on our website I lock it in that way. You can do this if you're watching us anywhere else. Now, when I say other places, included in the subscription with my research is our QT Mobile. It's a $40 a month value. It's thrown into the package for you. That's because when I publish, what happens is it's going to light up with a push notification and tell you Ira's morning subscriber video is out. Just click it. It's going to open right up in it if you want in your mobile. You can go to our website, watch it as well. You can go into our charting platforms. It'll be there if you're a subscriber as well. And it's not only the video. If you take my full research where you get my twice daily written updates and the like, and you can go to our website under research, it tells you all about it. You'll be getting those with the notification, and this is thrown in. The cost, folks, if you're just into the morning video, $7.95. If you're into the whole package, if you have a trading account with us, it's $40 every 30 days or $60 if you don't trade through us. But this runs $7.95. After that, it's either $15 per 30 days, or you can buy a 1 year, and that's your best value, at $156 a year, and it locks it in, and that's the equivalent of $13 per 30 days. How do you get this? It's really simple. Go to our website. Under the word research, you'll see our research products, the morning subscriber video, the full research, everything's there. It'll explain it. You can click up here if you're watching me on YouTube, this icon. It'll take you right to that page as well. In the meantime, I'm Ira Epstein in a snowy Chicago. At least it's cold, that much I can tell you now. And I will see you all come Monday. Have a great